comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a giga-transaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Righty, gentlemen, welcome back to another episode of Final Settlement. Today is Monday, March 23rd, 10:37 a.m. Eastern Standard Time. Wild week, wild weekend, wild morning. Markets whipsawing back and forth on some Trump comments, Iran rebuttals, and then Trump re-rebuttals. No idea really what's going on. Hard to believe anything you hear out of either this administration or any other. But markets are reacting nevertheless. Gentlemen, how are we doing?
Pretty good, but a little disorienting between, running businesses, the AI fever pitch, and then geopolitics kind of just shifting every hour. Feels like something new's being released. We're not at war. We are at war. We're opening up oil. We're not opening up oil. There's not enough fertilizer. There is enough fertilizer. It's pretty wild time to be alive right now.
Seems very distracting
difficult.
on purpose. Yeah, exactly. To really figure out what's going on in the world today.
Yeah. I'll just pull up the Bitcoin chart here for a second. You can kind of see this morning there was a jump, and this kind of happened across all risk assets, S&P, some other things, when Trump tweeted out that discussions were happening to some extent, kind of signaling the war was going to be over sooner rather than later. Iran then comes out and denies that. But then Trump sort of says, well, we weren't talking to the supreme leader. We were talking to some other top official. And then there were some reports that there was back channeling through other countries. So again, very hard to discern what's going on. But we've kind of seen this the past few weeks where like literally market hours, Trump says something to basically quell volatility, maybe dampen the uptrend on oil in particular. And then after the market closes or on the weekends, that's like when things have escalated. And like over the weekend, there was talks of, boots on the ground, ground invasions of Iran, general escalation. And then it was kind of like market open. Let's calm things down. So it's very hard to believe anything that's being said directionally. But I think what we do know, and this was something we had on the list, but this is just an interesting sort of anecdote from the United CEO, Scott Kirby, saying the airline is prepping for oil to hit 175. They don't think it comes back below 100 till the end of 2027. And so, this is a signal in the sense that this is a business that is attempting to plan for at least the medium to long term. And thinking that this uptrend in oil is here to stay. I think, and there's some credence to that in the sense that, part of what happened last week was the actual destruction of certain infrastructure, which has, estimates of into the years of basically what it would take to rebuild some of that infrastructure. And so there's going to be real constraint on oil. And then, Michael, as you referenced, like that kind of flows through to other things like fertilizer and other petrochemicals. So I think it's interesting to see a CEO sort of like what their signals they're sending to the market are relative to like what Trump is saying on any given morning. Because these people are needing to plan long term, where Trump is really just trying to like think, at most 12 hours ahead and like what markets are doing, it seems. But curious what you guys think.
Yeah, I think this is obviously the most important topic happening right now as it relates to business inflation. I think there's a couple key things in that, a CEO coming out, obviously having jet fuel being a big input into the operations. But this kind of, to your point, transpires across all industries. When you think about inflation, petroleum, byproducts, food, fertilizer. And so you just end up in this world already rocky with inflation and even harder to build a business. How do you think about risk? How do you think about capital outlays? I think one of the big things that's somewhat discussed is like ultimately the end of the dollar system as we know it, right? We knew there was rumblings post '08, Russian sanctions, but really when you think about petrodollar and then ultimately to be able to cross the strait, they're settling in yuan. This was a lot of that discussion that's been happening from multipolar world, BRICS countries. I mean, this is just laying this like ground. And I think it's just important from a business perspective, a lot of just reducing counterparty risk. And what I mean by counterparty risk is just like thinking about production of the things you need. It's the same thing as an individual. But specifically if you're a business, whether you need chips, you need laptops, like anything that you just like absolutely need, I don't hold for certain that they will be there in the future. I think we've seen slivers of this with COVID when you think about all the shortages that happen. And I'd be shocked because to your point, there was a wonderful podcast from the Monetary Matters. I think they're Blockworks produced pod, but point being is, and I don't even remember the guy that came on, but if you go back, it was 2 pods ago with an individual that's very deep in the commodities and oil markets, just explaining to what Brian was saying is that like this stuff is forward indicating in the sense that once you stop these productions from the refinement to like slowing things down, it ultimately takes like weeks, if not months, to turn back on, or if not years. And then now when you see some of the destruction that's happening, that like this stuff will have ramifications much further into the future than we know can expect. The last thing is as it relates to Trump, the reason why I think Groman angles to the taco situation is like there's nothing they can do for a long period of time that effectively disrupts the global financial system, because the whole thing will come cratering, right? You have the bond market pulled up here. We've seen inflation. There's gas, oil, diesel, like all these things are effectively going outside of the bands of normalcy, and that starts to break everything with it. And so there's only so long before they can do that, unless they're just going to cause a global financial collapse. And so I think that's really where you see this dynamic of back and forth where something has to happen. As much as things look grim over the weekend, this was kind of my expectation that they're going to start to walk things back, because it's the same thing with the tariffs. When Trump first got elected, it ultimately they did it until somebody had to calm them down. It was like, dude, you're going to blow up the whole system unless you kind of pull it back. So I think that's the base case, but obviously that only always works until it doesn't. And then maybe one day he doesn't chicken out and we end up in some kind of crazy, event. But until then, that's kind of like my operating system is there's disruption and volatility, but then he pulls it back. But it's a peak of what's looking like to come.
Yeah. I mean, it's a fair point. I would say the only difference between this and tariffs is there are bombs flying at this point. So it's a little more precarious to just think you can pull back from a lot of this stuff. I agree with you though, that they need to, or everything collapses. So it's they need to find an off ramp. And I think a lot of the commentary has been maybe too optimistic in the sense that oh yeah, we're going to figure this out. We're going to find a way to off ramp here in some manner or function. But yeah, Liam, any thoughts on that before we get into the? Go ahead.
Yeah, I mean, without sounding conspiratorial, there's a lot of discussions happening right now from capital investment. We've seen the sovereigns moving from the west to the east. That there is a real chance that outside of this, the Middle East ends up stronger, the East ends up stronger, oil trade, dollar dominance ends up weaker. That a lot of these things, there's bombs flying, but there's a real reality this all ends up in the next couple months or weeks in okay, we did what we had to do. Oil production goes up, which is a net positive, right? If you're producing that oil. And also, I don't follow geopolitics closely, but there are very smart people saying that potentially a regime change already took place in Iran before this. And so there's just questions of how much, obviously it's different than the tariffs, but I mean more from the market optics and the financial market optics of we just saw what happened in the volatility, and then with gold as well. I don't think it's a foregone conclusion that there are ways to just like start to pull back from the financial, from like the stock market perspective, not from inflation, because inflation is going to continue to rip. But I think from the equity markets, which basically the whole financial system's levered to be able to like come back with it.
Yeah.
Yeah, I mean,
They're interrelated though
crazy
too,
to-
right? Because go ahead.
No, I was just gonna say it's wild to see just after the U.S. trying to support Ukraine for a very long time, and then going in and doing what it's doing in Iran, just unsanctioning both Russian and Iranian oil over the past few days is definitely a telling sign that they are pretty concerned about just the impact from inflation and just where the bond market has gone, as well as oil prices. Right ahead of a midterm election is just not something that I think the administration is willing to let continue for any prolonged period of time. And then, in addition to that, it's interesting to see the United CEO really try to plan for $175 oil. I think that they were the one that was actually prepared for COVID or getting ahead of all of the other airlines and understood that this could be prolapsed or prolonged disruption to everything. And so I think that they're just similar to everything out there. There are folks who are planning for how the world is going to continue to change over the next few years and months, both related to this, what's going on the ground this week, as well as just how the world in general is shifting away from the existing power structures and the fact that the U.S. is allowing bombs to fly into UAE and some other countries that are it typically has been able to protect in the past, is just a telling situation of how the global world order and defense is changing pretty significantly over time, which has implications for cross national corporations and where they really want to store their capital in terms of dollars versus other assets out there too.
Yeah, agree with all that. The only other thing I was going to say was that, interestingly, sort of the bond market is now effectively pricing in one interest rate hike for 2026, which I think tells you all you need to know about inflation expectations and sort of where market participants think that, even if we do sort of find an off ramp for this war, like there's going to be lasting implications around the cost of goods and services and sort of knock-on effects of a lot of what's already happened, even if we were to sort of neatly tie this up somehow in the next few weeks or months. But we're going to move on. We have a big list of topics to get into. Mike, I'm going to kick it to you to talk about this news from last week around the CFTC joining the SEC to clarify the application of federal securities laws to crypto assets. What does this mean and why is it relevant?
Yeah, I mean, I think there's really a mosaic of things that are going on in this segment. There's obviously this that's been up for grabs forever when it comes to clarity on what is a security and then what is a commodity. Historically, anybody that was conservative, or I don't even want to say conservative, but just understood production and registered securities or unregistered securities would call most crypto assets unregistered securities because they have a central issuer. They don't pass the Howey test. And then commodities would be really tied to physical production of like creation in the real world aspect. And, where Bitcoin has that example is via proof of work. But this clarity, and I think a lot of individuals saw it coming, was putting a whole basket of things into the commodity field that traditionally weren't. So I believe Solana, Ripple, Ripple, and a bunch of other assets are in that structure. I think the main angle here, and before we go, if you guys have thoughts, we'll go to some of the others because I think they fit nicely with this, is ultimately that this is a lot of the like groundwork before the market participants, the Morgan Stanleys, the Fidelities, and others that are stepping in a big way needed to be in place because they do need clarity. If they're going to offer these securities or commodities to the market, they need clarity on like what they are before they can go out and start positioning them, among other things. So it's obviously, bullish in the sense there's market structure coming that will allow institutions to have clarity into these things. It's also very bearish on obviously the gamification and the speculation that, persists right now.
Yeah, I'm fortunate in the sense that I think these things are securities and they're going to basically bend the rules to allow a lot of this stuff to proliferate, which was probably always going to be the case. But the bigger takeaway or tell to me is effectively, I put a higher likelihood that we get the Clarity Act passed sooner rather than later. If the CFTC and SEC are going to kind of sing kumbaya here and like say we need to get something done and have this almost joint responsibility in terms of agreeing on what market structure could or should look like that tells me we're closer to getting something passed than not. And then this is another like we wanted to share Elliot Terrett saying that effectively characterizing some progress in terms of specifically the Clarity Act talks and what's going on there. So remains to be seen. I mean, we've kind of been going back and forth on this for a while now, it seems. But yeah, anything else on this, Mike?
Yeah, I mean, I think tying in a few just related to, and then we can riff on whichever direction you guys want to go is, to your point, I didn't think about it in that way, but that actually makes sense. You get clarity on, no pun intended, on the CFTC, SEC ruling on commodities versus securities. It looks very close. So I think Lummis in that tweet, somebody was referencing it's close to like 99.9%. My understanding of the angle is that you will be able to pass back quote unquote yield, whether they call it that or not. It just can't be in a one-to-one relationship. So what that means is, let's say you're a Coinbase Prime or whatever, one client, you get exposure maybe based on your tier on the amount of yield you get back. It can be tied potentially to some of the balance you have, but it's not going to be like you have $100,000 and you're getting exactly proportion of that capital there, which sounds like a decent middle ground. It helps because when you have it directly tied, that really, it feels like a good compromise. If somebody is not deep in the weeds here and they're looking at, do I go to Wells Fargo, do I go to Coinbase, and they're going to give me 5%, there's a bunch of other stipulations on that 5% theoretically. So that at least gets them to not apples to apples. So that feels very positive from the Clarity Act. I've long held Clarity Act will be that kind of last moment before I think the machine is ready to roll when it comes to, Bitcoin flows turning on and just like a lot of the things turning on with Morgan Stanley and others. The other two things just to call out was randomly, I mean, it's not randomly. I think it just shows where we're going in this tokenization and movement of capital into 24/7 markets. We talked about it 6 months ago. Hyperliquid was out there, quote unquote, decentralized blockchain. They've been, public right now, really running with a lot of the commodities trading because of the 24/7 markets. But then also S&P 500 just licensed the ability to trade that perpetuals of 24/7 on Hyperliquid. And then the only other thing is around the SEC approving NASDAQ to be listed on tokenized securities. Well, why that's probably the most interesting is because it's treating those stocks like fungible tokens, effectively have the same QSIP, so they're recognized across the spectrums versus being like on the outside periphery. Why am I talking about this? Why do I care? Because we're, a Bitcoin company, Bitcoin focused podcast. The reason why is because I think that a lot of these things needed to naturally get in place before, again, that machine starts running. And also in reality is most companies, if they're going to survive in the future, they don't have to become crypto companies, but they're going to have to start looking more like traditional banks or traditional fintechs. That means that traditional banks and fintechs are going to be adopting these assets in the same way that native companies to this space will lose market share, cease to exist, will not be acquired unless they figure out how to provide other services next to Bitcoin. And that's just pragmatic and rational, because if somebody's offering you trade, as an example, and let's say the best Bitcoin only exchange offers you 45 bips on trade. Well, if Bank of America is offering you 35 and you have your mortgage and you have your bank account there, the rational thing to do is just stay there. I'm not saying that's for everyone, especially native people in the space that have an allegiance to a certain company. But when you think about 99.9% of people coming into the space, that's just rationally going to do. So we've been thinking a lot about this. We have a lot planned on the Onramp side related to this stuff. But I thought this was really bullish, middle to long term, simply because this is the changing of the financial system for better or worse. And we're just going to have things traded 24/7, tokenized, and it's going to come with a lot of volatility, a lot of rugging, but also a lot of that capital is going to flow into Bitcoin.
Couldn't agree more. There are a few things that are interesting too, just to point out on this as well. like all this groundwork has been laid for a really long time, but ultimately, I think a lot of the Clarity Act getting across the line is ultimately going to depend on just what's going on right now in like Iran and the popularity of the Republicans, regardless if we want it or not. Like a lot of this, digital asset ecosystem is just associated with Trump at the moment, and Democrats don't like it, and so the popularity of the Republicans will probably impact when and if this gets over the line. I think it's more of a question of when, not if. The yield piece is interesting too. It seems like the banks probably got a lot of what they were looking for too. Just the fact that if you are larger, you're able to capture a larger part of the yield means that, like we've been seeing over the past 50 years or so, the disintermediation of small credit unions and smaller financial institutions, because there's probably going to be some B2B2C yield that the larger primes it can actually pass along to their customers on the other side. So thought that those two pieces were really interesting. But in the end, yeah, I mean, in order to have Citi, Bank of America, or Morgan Stanley, all those folks really start to offer strong products to their clients, they want it to be regulated. And we'll touch on some of this later too. But essentially, everybody right now is just in a CYA game as it relates to digital assets, because it's such a nascent industry and there's been so many bad actors in the space to date. So it really just does need to have some of these regulations before there's just a flood of more capital coming into the space is kind of a catalyst.
Yeah, that's all. Agree with all that. I think what stuck out to me around the S&P hyperliquid story was there was a stat I saw last week that, and you sort of alluded to this, Mike, but like on hyperliquid, like the majority of volume is now actually more traditional assets, as opposed to like what that platform started as was a way to trade perpetuals on crypto tokens. So like whether it was Solana or Ethereum or other things. And now it's like it's oil and copper and like commodities that amass the majority of trading volume. And so I think this is just another step in that direction of sort of like, maybe it was always going to play out like this, but these digital asset blockchain rails are really being, more and more used for traditional financial activities as opposed to like the crypto native token stuff, which is interesting in the context of what we just talked about around like the clarity and the market structure and people wanting to know if these things are securities or not. It's like, well, are people even trading that stuff anymore? It kind of seems like not. They're just using these rails for tokenizing the world or whatnot. But we had a few other links we want to get to around stablecoins in particular. This is Big Mike's stablecoin roundup. I'll go to the Stripe headline first, Michael. What's going on with this? The machine payments protocol that Stripe is talking about.
If the Bitcoin price doubled tomorrow, would you feel good about how it's being secured right now? Most people have not really pressure tested that, and I get it. I have talked to people who have self-custodied for over a decade and others who've stayed on exchanges because they could never get comfortable managing their own keys. Both camps have real concerns. That is why we built Onramp, multi-institution custody, so no single company can lose it, move it, or use it. Lloyd's of London insurance, inheritance planning built in, and a team that can walk you through the entire setup. Get started in 15 minutes. Book a free consultation at onrampbitcoin.com. Onramp, secured by 3, controlled by me.
Yeah, so I mean, this past week, Tempo obviously been in the news with Stripe. I mean, Stripe, when you think about it, their foresight and scale has been pretty incredible. I think they just raised at $150 billion valuation. They did the Bridge acquisition, which in TradFi FinTech might be one of the if they can execute on this and the market's going where we think it is, one of the greatest M&A acquisitions for a company that Bridge was only a few years old at $1 billion. But the idea is, so Tempo had raised $500 million at I think a $5 billion valuation close to a year ago. The idea was to really build a protocol for really just stable coins, fast movement. It's my understanding that other like cryptocurrencies can be settled on there, but they're incentivized not to via the fee structure. And so I believe MPP stands for multi-path payments. It is effectively using Stripe in their tooling for both sides of the market, right? So if you're paying over this, it's not just tempos or whatever stablecoin they have. So any asset can settle here, USDC stablecoins, but also they have an integration with Lightspark to be able to net settle BTC. But the core idea is that you can inject this via into like HTTP pages, anything that you would be natively on the internet. There's subtle differences between what you hear about in like X402, which is what Coinbase's protocol for injecting, value into HTTP, and then L402, which is like Lightning's implementation. The net of it is that if you're using Stripe and MPP, you're effectively using their tooling. So when you go and set up a Stripe account, you have your own business onboarding, you have your own processing around it. But the core idea is whether it's AI, agentic commerce, or just native payments online, this helps provide the tooling and infrastructure to seamlessly accept digital value, which I think we've talked about heavily here, that we're just going to increasingly see more agentic commerce. The last thing to say is like, well, why would you want that? Like, why wouldn't you put your credit card in? There will always still, for a long time, in the same way I think of like the example here is like early internet days, very few people would even put their card online because they were worried about phishing, social engineering, all the things associated with when the internet first came about. Similar here is there's going to be better tooling and better permissioning. But when you think about, forget about like AI hitting APIs and having the right permission set to go, and it's less of a clunky experience than having to authenticate with a different platform, put in credentials to get the API, load up your credit card. I think about more seamless transactions of when you're, this is a funny example, but it's still worthwhile of like in your home, as you start to get more digitized, think about your refrigerator as an example. There's going to be automatic fulfillment where you realize that because the weight in the door has the milk lower than expected or whatever, it's going to send to Amazon, we need to buy this, and then you're just going to have it programmatically paid for. And this is going to exist across internet commerce, whether it's via your shopping habits for anything that you're after, or agentic commerce when it comes to leveraging AI. And so they're prepared for this. They're looking at it, and there's a real opportunity for them. This ties into another segment or a topic we'll talk about with MasterCard's acquisition. But there's Visa, MasterCard, and Stripe playing to be in the middle of that mix. And they're just coming at it from a completely native angle versus these other incumbents. And it's really interesting to watch.
Yeah. You mentioned the MasterCard BVNK deal. This was fascinating in the sense that, this was talked about last year in the context of Coinbase potentially doing a deal for BVNK that sort of fell through. And now it comes out that this $1.8 billion deal for MasterCard to acquire BVNK seems to be getting across the finish line. And this comes after, as you mentioned, Stripe's deal, which I believe the numbers there were, here, $1.1 billion for Bridge. So price is going up for stablecoin infrastructure effectively. And so interesting dynamics here. Maybe Liam, I'll kick it to you. Any thoughts on this deal? This was announced last week. Pretty large news.
Yeah, I mean, it's massive. It's despite the bear market in digital assets as a whole, stablecoins are definitely in a bull market right now. Just the amount of tooling that's coming out across the Stripe Bridge side and the amount of demand that's coming for stablecoin orchestration platforms, I think that this will continue to increase. I'm really surprised to see the fact that the Coinbase acquisition fell through and they got a deal done with MasterCard, because I think MasterCard obviously wants to be in the space. I think they were trying to go for the acquisition of Zero Hash a few months ago, but that ended up falling through. So obviously all of the payment providers are making their mark, understanding that this is going to be where the enterprise value of the industry is going longer term, and they're continuing to put their stake in the ground. I mean, other than that, No, nothing necessarily that's really standing out here. Not surprised that this deal ended up getting done, just because there's really so much demand for infrastructure, but there's really just like a massive mismatch between the amount of legitimate companies in the space and the amount of acquirers as this legislation starts to turn.
Yeah, one thing that's really interesting, this is a statement to be a little hyperbolic, but I believe it to be directionally true is they're not even acquiring them for their technology or their clients. They're acquiring them for their team. Now obviously they have technology and they have clients and they have revenue. But to Liam's point, there's really two big bottlenecks. Like when you think about how we started the segment, maybe that's the key meta to explaining that is the land is shifting beneath us. We talk about all the time on the AI side, but similarly in the way money moves and the value that will be delivered to these fintechs and incumbents. And there's only so much infrastructure to buy. That's one part. But even more importantly, in my mind, there's only so many brains that are building at scale in this space and have a lens into the future. And so when you look at like what Bridge and their revenue and where they were at, probably pales in comparison to the value that they got Stripe by buying that brand, but getting that team that understands the space. And Stripe probably already had some of that internally, right? Because they are, probably what is it, 15-year-old firm or whatever. So they're native to just like very different profile than a MasterCard and Visa. So they were looking at this, but they still needed people that had operated in this world to go acquire them to build this new future. And so that MasterCard angle, to Liam's point, they were looking at Zero Hash, another native firm that fell apart, and they knew they had to make a play here if they're going to be relevant. And this is something that I talk to a lot of banks about when we're talking about potential partnerships is like, it's more of in a partnership. It's really an alliance because there's bi-directional support. Like when a bank, especially a regional bank, turns these assets on, they really have two choices. They can go do the PNC route and go sign up with Coinbase. And then they effectively are like, in my view, and I've talked to them about this, it's almost like sealing their fate because there will get disintermediated on a long enough time horizon in the same way most banks have been disintermediated because there's 4 large banks in the US that control and hold most of the assets, that if you're just going to give Coinbase that flow and you're going to operate there, you're effectively just kind of like signing, in my view, again, a death wish in that like you won't be around for the future because now you have no you have the client relationship in some ways, but then the asset, the underlying is just getting pushed off to a third party provider. And so when we talk with banks, it's very similar in that lens of there's a bidirectional relationship of they have the licensing, they have the reputations, they have the brand. But on the same side, if they're going to turn on Bitcoin custody, lending stablecoins, they need the support and leverage and understanding where the market is going. Anybody listening here, I would imagine, has a bent towards BTC winning out long-term over other assets. We look at Bitcoin in that same way along with stablecoins. There's still very few people on the planet Earth that are going to talk to these large institutions with that lens. And so our goal and our job is to find those firms because we think with those firms building with that focus are going to outcompete others that are going to get caught chasing the shiny objects. And so I think that's just an important part of the BVNK acquisition is MasterCard really needs somebody that's looking at the world through their lens to help them build that future.
Yeah. I mean, this is something we've talked about for probably over a year now on the show of like, there's not too many paths for a company like MasterCard. You either partner with Coinbase or you go out and acquire effectively the brains to your point, Michael, to be able to at least be sort of on the forward foot in terms of thinking through how this world is going to play out. One other stablecoin headline I did want to get to was this gold-backed stablecoin, Mike. I'm sure this tickled your fancy. Tokenization platform Theo plans to introduce gold-powered stablecoin, which is set to generate yield from 2 independent sources. I don't know what that last part means there. Yields from 2 independent sources. Well, maybe we'll find out here.
Yeah.
Oh, something to do with hydroliquid. Great.
So this my favorite part about it's not my favorite. It's one of my favorite parts about building is like in general, there's very few people I make happy because as much as I like have all my money in Bitcoin, I just see the world for what it is. And like I told Brian about this thing was coming, Hyperliquid was coming. Like for whatever reason, there's people telling me,
dude,
it's the same thing with.
You didn't tell me about Hyperliquid. I knew Hyperliquid was a thing long before
I didn't tell you about Hyperliquid, but I was explaining how like the point is that 12 months ago, you would have laughed if you thought like S&P was going to be licensing and the volume of gold and commodities. Like that was the point. That was the point. And it's the same way of like the stablecoin or the gold stuff. It's more of just like the angle here that's fascinating. I didn't even know this was on the radar. This was Liam and Nick. They had this. If anybody's not subscribing, you should subscribe to, I think we're going to change the name, but it's still Early Riders.
The Open Range?
Open Range
newsletter. Like and subscribe.
Open Range newsletter. Like and subscribe. But why this really caught my eye is because something that I've long held is we go to this free banking style, which we're kind of already there when you think about it. Like, why would somebody trade on Hyperliquid is because they expect them to fulfill what they're promising. Similar with Binance. Now, these stable coins ultimately go in that direction. And they start today backed by treasuries, and then people are going to start backing them with other things. I think this has long been Tether's play, and they've long seen that. And so they don't necessarily do it exactly today, but their balance sheet reflects that, and that gives them the air of credibility if somebody's going to put real significant flow there. So where this caught my eye was that gold is a lot theoretically less volatile than Bitcoin. In the past 12 months, it's been a little bit different, but that they were having a stable coin backed by gold. I think where you're saying two independent sources, they're doing a little bit of like their long spot, and then they're trading the futures to hedge out some of the volatility. But that we will just naturally start to see other ways that you're going to back a stable coin. Now, I didn't go deep enough, and I don't know if Liam did, in that if this is only available, I would imagine, to outside of U.S. investors. But I thought what was most interesting here wasn't even the Hyperliquid stuff. It was just mainly the aspect of more and more the design surface is out there, and people are going to have really interesting ways to peg a dollar to different assets. And then that free banking style reputation and Lindy is what's going to allow significant flow and reputation to ultimately go there. And so TBD if this actually works out, but I expect to see a lot more of this. And then, give or take 2 to 10 years from now, I do think we're going to see dollar stable coins backed by a bunch of other assets outside of just U.S. treasuries.
I think that's right. I think the yield mostly just comes from the cash and carry trade, where there still is, some amount of dollars within this as well. But to your point, I think that over the long term, folks are going to increasingly look like Tether in terms of diversifying their assets across both treasuries, maybe some amount of private assets that are long-term investments. That's a smaller portion of the portfolio, but primarily gold and Bitcoin, and maybe a little bit of land in there too. I think despite what we're seeing right now with the recent sell-off in gold, just shows that right now there are a ton of folks out there who can't necessarily make the jump all the way from dollars or gold-backed stablecoins, and gold really is just the center of money. And as we digitize money, there are going to be more and more ways in order to try to create gold-backed stablecoins and gold-backed money, including tokenized gold. And Tether's obviously doing a lot there. But yeah, I think that we'll see more attempts to do it. Who knows if this ends up being successful or not, though.
Yeah, 100%. Paolo and Tether have been all over this for a long time. This was an interesting line that just from this headline here, it's saying we're in a bear market for crypto now. We're starting out with risk-off assets, whether that's T-bills or coal. So, maybe that's just part of the calculus here too. And it relates to what I wanted to jump to next, which was Kraken freezing its multi-billion-dollar IPO plans due to difficult market conditions. I guess not totally surprising, but I think, there's been basically, we had Gemini, we had BitGo, we had some other sort of large IPO plans. Bullish was the other one that, I haven't looked at their stock charts recently, but I'd imagine they're trending downwards since their IPO. So I think this is just sort of some cautionary footing from Kraken, who as recently as 4 months ago said it was planning to go public, and so now is sort of shelving those plans. So maybe later this year it happens. But any thoughts on this one, guys?
I mean, the biggest one is I do think there's the market conditions, but I do think there's just internal dynamics that aren't discussed here. Specifically, their CFO. I don't know if he got ousted or left about 30 to 60 days ago. And so Kraken is like a darling in the crypto sense. They've been around for a while, but they're also just an interesting organization that, I'd be very interested to see what their financials look like. We know what Gemini's look like. Gemini had 30% of a headcount reduction the past like week or two. That market conditions also was just like internal dynamic. I think it's probably just there's a component of like internal. I don't know what the right word is, but like I don't know if they have their shit together as well. If you lose your CFO in the middle of trying to go public, that is not generally a good sign.
Not a great sign, yeah.
Yeah, that's definitely something that is just going to be a red flag that makes a lot of institutional investors not touch the company. But Kraken is one of those companies out there that actually does publish their financials. I just put it in the chat here. They're adjusted. I mean, it sounds like these are audited. I forget where exactly they are audited from, but it seems like in 2025 they made 2.2 billion in revenue, almost over 500 million in adjusted EBITDA. So they are one of the companies who's been around for a longer period of time and has been profitable. And they did raise, I think it was $40 billion or at a $40 billion valuation with participation from Citadel and some other folks ahead of this too. So I think there honestly may be more to deal with just internal, and I wouldn't be surprised if there is also a little bit of rumblings that they can hear about what's going on with potential legislation or other internal dynamics out there that we aren't just privy to. But yeah, they are one who, at least based on what they've provided with their financials, is profitable, unlike the BitGo or BitGo is profitable, but Gemini is getting crushed. I think they're down 80% since listing, and BitGo just is down a bit because the bull market has kind of turned since the listing of those two stocks.
So not to put you on the spot, but I'm genuinely curious if you know, like their revenue profile versus a BitGo, and specifically at valuation, because that's significantly, obviously it's private markets, but if they were raising at a 40 billion, BitGo went, IPO'd at a few $1 billion. I think they're valued probably now, I haven't looked, but recently with the drawdown at $1.5 billion. That 15 billion in revenue is a little bit of accounting when you think on the BitGo side because of the trading volume. I think it was closer to like, I don't know. I don't want to be unfair to them, but it was much less than that when you look at like custody fees. Obviously we love BitGo, they're a partner, but I'm just thinking about like that valuation compared to here. What's the revenue mix that's different that gives them a greater valuation, at least in private markets?
I don't know if it's necessarily revenue. I think it's the adjusted EBITDA. I don't know BitGo's off the top of my head in terms of EBITDA, but I think that their net profit is something like 15 million, or was last year. And these guys had over $500 million in adjusted EBITDA. And so they have almost 50 billion in terms of assets on the platform. I think they've just been around longer. They've been a little bit more customer facing, and that's kind of why the companies out there have been valuing Kraken at a little bit higher than a folks like BitGo.
Yeah, I mean, that's interesting because they, I believe they integrated Alpaca on the back end for stock trading. And that goes back to the point of like market optics and looking more like a client, not only client facing firm, but also offering different products that are going to cross that bridge when it looks like a traditional like finance firm versus more of an infrastructure play. And so again, I don't even know how much is warranted in that valuation, but we all know the stock market is more of a vibes and momentum game. So that would make sense because I think I actually don't know how long they've been letting people trade traditional equities, but I feel like it's been at least a decent while versus, I think Coinbase just turned that on.
Yeah, you got to imagine that Citadel is getting some sort of data sharing or sweetheart deal, especially as they turn on equities on the platform too. And I'm sure that Citadel, especially their quant team, is trading digital assets and like probably been on hyperliquid and stuff too.
Yeah, Kraken's OTC and trading is more of a trading venue than BitGo would be.
Check out earlyriders.com for all the latest in Bitcoin investment research. Now back to the show.
Okay. I did want to move on. I was going to bring up the investor survey that EY and Coinbase put out. I think there was some interesting data in here. We could take it in a number of different directions. But basically, this was a institutional investor digital asset survey put together by EY and Coinbase. There's a lot in here, primarily focused on sort of stablecoin adoption, tokenization, real world assets, general allocation frameworks, how people are thinking about their exposure to digital assets. I will, before I kick it to you guys, the most interesting thing in here to me was slide 20 around custodians. 61% of respondents currently invested in digital assets use more than one custodian, while 36% use a single custodian. And 56% have a multi-custodian model and plan to continue. 24% have a single custodian model, plan to continue with that. And then there was some amount here that, 12% that have a single custodian model, but plan to switch to a multi-custodian model. I just thought this was interesting because it's very logical in the sense that more is better than one, even if you're just diversifying custodians. We've seen this in the mining industry for some time where firms that hold a lot of Bitcoin tend to spread out the custody of their assets because if something were to happen to one of them, at least you retain the assets from the other custodians. Now, how this relates obviously to Onramp and what we do there in the sense that multi-institution custody is fundamentally a different architecture than just distributing assets to multiple custodians. It actually provides redundancy and fault tolerance with the quorum model to say, yes, we're going to spread this out, but in a quorum structure where if something happens to one, you're not losing 33%, you're actually losing 0%. So this was encouraging to me in the sense that at least directionally people are thinking about this correctly in the sense that there's a recognition that just having a single custodian is bad, particularly for an asset like Bitcoin. Curious what else you guys pulled out of this survey or if you had any thoughts on this one in particular.
Yeah, I didn't have a chance to look at this, so I don't have much to add outside of what you just called out here, which is really fascinating on the multi-custodial model. There's a business world or business idea in the crypto world where somebody should launch something related to what we do, except for just go and like figure out the relationship to manage with the other custodians, and then you give the right legal assurances from the owner of those assets. So you obfuscate having to deal with them, and you give them a unified platform. Because we often get this. I just got this the other day from sending an email out, and the individual was asking, he was moving his IRA over, but then also asking, are you guys looking at gold? And then what would it be in multi-institution as well? And I think that's a big part of the barrier. Like we see this end state where Bitcoin settles in multi-institution. Most people don't actually understand that multi-sig, native multi-sig is only available on the Bitcoin protocol. Everything else would have to build some kind of smart contract. We've obviously seen the problems with those smart contracts in multi-sig. The most famous one or infamous one is the Bybit hack. But the point being is that the market, to your point, Brian, understands risk. At least sophisticated investors do. They're saying they want to split it around. We see Saylor doing this, but it's still obviously inefficient. You have multiple counterparties, multiple whitelists, multiple levels, and then you also still have a single counterparty that can lose a percentage of those assets. But this really highlights that how not only early, but like the lack of education, because most people will see multi-custody and they'll think that you're just separating the asset in 3 different custodians. But it made me think it's not a bad idea if we decide to, bring gold to the platform, that you could offer to be able to split that gold, the physical gold in that,
Yeah.
deal. So it's at least some level of diversification. Um, but yeah, it's fascinating to see that people are asking about that.
Yeah, the other aspect that I thought was interesting too is page 3, Brian. It's just the fact that I mean, you can't necessarily blame everybody because they only have limited amount of time to think about digital assets and Bitcoin in general. But it sounds like 2/3 report looking to get their first exposure to digital assets through ETFs, and 81% prefer spot exposure through a registered vehicle. So it's just natural that, like we've been talking about, especially at the top of the episode, of all the kind of changes to regulation and Morgan Stanley lining up their new Bitcoin ETF, and essentially more clarity, bringing more assets into the industry as a whole. A lot of these folks don't necessarily have the time or bandwidth, especially if they are not necessarily the largest platforms in the world, to really do detailed due diligence on every single custodian and platform that they're working with. And so they by having registered exposure via ETFs and other products like that, that's just going to be the natural on ramp to folks who are looking to get exposure for the first time in the space, and then they'll continue to do more and more due diligence on that front. So yeah, I mean, I think that we're still in the very earliest stages of where the digital asset and Bitcoin space is going, and we've just really barely started to scratch the surface.
Yeah, the only other thing I'll say is I obviously did a control F for the word Bitcoin throughout this report. And unsurprisingly, it's mentioned twice and it's on this slide, which the framework is effectively like, what are you holding outside of Bitcoin and ETH? And so you can see here, like, still, the vast majority of these institutional allocators are holding either Bitcoin or Ethereum, and sort of, half are sort of venturing outside of Bitcoin or Ethereum. But just, again, unsurprising, this is Coinbase. This is, likely to be more focused on stable coins, tokenization, things outside of Bitcoin. Do we want to move on to AI corner, robotics corner? Michael, you brought a lot of links. Tell me where to start.
Yeah, I can. One thing just to fill here, and we'll talk more about it. There's a lot we can probably write about. Is ultimately, it's hard. The industry building here, because when you think about it, we just had the conversation on Kraken and trading and their valuation compared to infrastructure and custody, which is a lot more prudent, pragmatic. And you think about Coinbase, like the markets reward high velocity gambling. It's just the state of where things are. And so that's an opportunity. But on the other side of it, because there's still a stigma from different angles, whether it's individuals looking at Bitcoin of like, well, what is that? It's speculative, to there's not a lot of things to do with Bitcoin in these markets outside of like buy and hold. And so you end up in these weird parts across the board. And that's why I long been talking about this and think about it from our business building and also investing. If you want to have the underlying thesis of Bitcoin is the best money, treating it in the best way, but then you have to meet the market where they're at. And that's different ways. That's offering other services that aren't like, Ponzi's, but things that add value to the individuals. But then also, how do you change that messaging that bridges that gap? Because I think that's the thing that like I've naively like really just missed, is that Bitcoin still has this insane stigma when you bring it up with individuals, that there's something to building almost just building a fintech. When you talk to people, it's like, I'm building a fintech, it's powered by the best savings technology. I'm not saying that's what we do, but there's a lot there that still can be unpacked and unraveled. But it does take a level of nuance of sophistication, because you're basically coming at it from like 10 different angles, that you understood the market not really being the most palatable, and then you have to wrap it all together. And we're still so early in Bitcoin, you haven't seen that chasm get crossed per se. And that's really where I think of our job at Onramp, and even on earlier writer side, is how do you power all of this by the best technology, the best asset on the planet Earth, but also meet the market where they're at and like Trojan horse them into it without having to hit them over the head with like, you're buying Bitcoin, it's the best money, the dollar's going to zero.
Yeah, 100%. I mean, Bitcoin still seems so alien and almost radical to the average sort of layperson, particularly in the TradFi world, that it makes sense that there's been, I guess, a lot more interest and sort of follow through on whether it's stable coins or tokenization or old assets, because it's just like, it's much more easy for them to wrap their arms around that. It's like, okay, these are newer, faster, cheaper rails, but these are assets I'm familiar with. There's a reason why people would want to own these. Um, and as we've discussed, like Bitcoin is so different than all this stuff. It even from just like an asset perspective, but also the network perspective. Multi-sig as an example that you talked about. Um, it is just harder for people to wrap their minds around. So you're totally right. Like the companies that are able to effectively bridge those worlds, I think are going to be the most successful going forward.
Yeah.
But,
And that's the angle of the pod why we talk about this stuff, because I know some people may end up getting turned off or wonder why we talk about crypto. But I think that what's really missing in the landscape is, and we see this in like macro, most people that follow this space really gravitate and resonate with somebody that understands Bitcoin and then looks at the world through that lens, because they're at least just coming from a fundamental understanding of not only money doesn't grow on trees, but this is the best form of money. And that gives you just a better lens to look at different sectors of the market. And this one is that the world's going to be changing. It's objectively true what you said, in the sense of like, look at how much money, forget about crypto, just has gone into stable coins. Look how much movement has happened in the traditional financial system and in the tech world. Stripe straddles that, but we've seen YouTube, we've seen Google, we've seen these other companies, Meta now doing it. So there really is an angle to come at the market with understanding Bitcoin, but then explaining where these other assets sit within them. I think it's a smaller part of the market, but it will continue to grow as smart people recognize what's the signal, what's the noise. So I put a couple of things here. I'll just riff on them, and then we related to robotics. I think the robotics stuff is really interesting for a number of reasons. One is it's obviously coming, but really because of there's another component of demographic changes, specifically in the United States. And we know that there's just not enough people growing up having to deal with a lot of these roles. What does it look like long term? What does it look like from an inflation with human capital versus having to pay for robots? And so there was a number of things that came out this past week related. There was Bezos setting up $100 billion fund to effectively go and invest in building more efficient systems with robotics in manufacturing. There was Amazon also acquired a firm called River. This is interesting. If you click on that link, because they call them stair climbing robots, or it's this angle of delivery on wheels, because this is where Travis Kalanick and Adams are really coming into play. Is that there's a notion of humanoid robots that are being built, but there's just a lot of forgot the term that's called where there's a term where if you're going to thread a needle, the amount of robotics and sophistication with the movement is fundamentally different than when you think about just manufacturer delivery. And so the understanding of wheels and delivery are a lot closer than these other types of robotics. So they just did that. And then, I would say those are the two big ones related to robotics outside of AI, because there's some other stuff in AI here, but I know Liam might have some thoughts on the Bezos fund.
I mean, those are just obscenely large numbers. I think it's tied for the largest fund that's been out there, investing in what I think are kind of the hottest sectors right now in the what we'll call more legacy industrial space of chip making, defense, and aerospace. Everybody knows that these three are critical infrastructures, are critical industries to U.S. national security, and I don't think many folks are betting against Bezos. So that'll be really interesting to see how that ends up playing out. I think that there is a ton to that, he's going to be able to develop the best teams to join him as well. But yeah, not a ton outside of that. Just these numbers are getting so absurdly large, and having this amount of capital behind you is going to allow for a lot of consolidation in these industries, where there are going to be folks who are a little bit slower to adopt these new technologies versus I'm not going to bet against Bezos.
Yeah, I mean, there's an insane amount of tribal knowledge and scaling Amazon from a robotics perspective to be able to, and then connections to make those allocations. The other things just related to AI was, I thought this was really fascinating because we've talked about this before. So OpenAI is in talks with TPG and Bain Capital for a $10 billion joint venture. And then Anthropic with Blackstone. And I don't know who Hellman and Friedman is, but on a similar type deal. And it's this idea that they're effectively building like PE/consulting arms because this technology is so impossible for these large firms to figure out how to leverage it, how to integrate it into their systems, that it's this like symbiotic relationship that you have these firms that are in the game of allocating capital and coordinating, accumulating capital. And then you have the other side, which is Anthropic and OpenAI needing to get these licenses and get this like enterprise change management in these organizations. I think I personally think it's an interesting race because I'll always take the bet of the net new emergent company that will be able to outcompete these firms, even in the like regulatory moat spaces like health and legal on a long enough time horizon, because I do think that people will figure out where those moats are and how do you like capture that. There'll be other capital that comes in with like net new emergent companies, but I think it's just going to be a fascinating place to see play out over the next decade on like who wins. Is it the incumbents that can partner with these guys and infuse this stuff and cut their head count? Or is it going to be net new players that just step in and, you know, outrun them because they're just leaner and they come from that bridge analogy where they're just native to the space and they know kind of where the bodies are buried because they built the old firm in the wrong way.
Yeah, right. As we've been recording too, there's an article that came out that said OpenAI is luring these private equity firms with 17.5% guaranteed returns. So OpenAI is offering TPG and some of these other firms out there, according to Reuters, that they'll like pay them and offer them the ability to access the latest models ahead of everybody else. So, I mean, Anthropic has done very well as of late. I'm not necessarily saying that OpenAI is done for sure, but it's becoming a more and more complex capital structure when you think about all of their deals that are, you know, essentially paying for tokens with other firms out there and then trying to offer 17.5% guaranteed returns is starting to get into something that's you know, the more complex in a way from a typical financing structure there are obviously a little bit more red flags that folks need to be raising. And so I don't think that you necessarily offer this if you don't have to. So it's just going to be interesting to continue to follow the different financial engineering structures ahead of these companies likely going public next year.
Nothing like guaranteed 17.5% returns. No red flags there. Sounds legit. Anything else you guys wanted to hit? We're right around an hour, so that was good timing today, John.
Just other two big ones are just looking at related to Cloudflare CEO referenced that human traffic by 2027. He expects agentic traffic AI to be leapfrog that bots have the ability 1,000 times over hit as many websites. And then kind of related is Walmart. It came out that they secured a patent for AI tools to adjust prices based on demand and elasticity. I think those are kind of intertwined in the sense that like from a privacy perspective, we talk about stablecoins and the growth of it, and that's going to happen. But at the same time, I mean, these are effectively private CBDCs. And so they're going to have, along with your identification, a whole slew of problems when it comes to, we see this already. If you go try to get a flight or whatever you're trying to do, you can even go to a Namecheap and, you know, you try to like put in a domain and then you'll get sniped, you know, a few weeks later by somebody else because there's all these different like ways to track on like what's being looked at, and then those prices will surge. So I just see a world where you end up with more surveillance, and it looks like it's a positive for the net consumer, but it ultimately ends up not. And that's really where Bitcoin long-term wins out, specifically on the native internet side of things. Yes, there will be bots, there'll be more AI, but if you're able to build in finite scarcity into the internet, via Satoshis, you're just going to end up with, I think, the long-term way how the internet unravels. But again, we're still decades, I think, from that.
Yeah, the Walmart deal just reminds me of, like, when you hear stories of hyperinflation in other countries where they can't update the prices in the aisles fast enough. Well, now they can, because you're gonna have real time updates. So this is great for the hyperinflationary future. Good stuff, gentlemen.
I got one more for you, Brian. Just look, because I'm waiting for our guys. I need them down in Texas, and I don't know.
What do we got?
I'm not gonna be able to
Something
show it.
disparaging about the Northeast.
No, I'm not gonna be able to show it. But the thing I wanted to pull up was, because it's honestly been shocking to me to see the amount of gravity that's come to Texas. It came out. Musk had, it was actually right across from where I used to live, the Seahome district of Austin. Came out with a new prefab that's going to be built in Austin, right? I believe it's going to be the same place, East Austin, where they have their Tesla plant, but it's a merger or a collaboration between XAI, SpaceX, and Tesla on this chip manufacturing facility. But then what I was going to pull up was tongue in cheek was Travis Kalanick posted on social. This, anybody wants to look it up, it's on the top of his deal. It's him water skiing. Because he's just out there, like, having his time of his life, on the deal. So yeah, we're waiting for you guys. And if anybody's listening that wants to come down, this will actually be relevant. Stables. So we have it'll be Q3, Q4. We got to lock down the date. It'll be cooler to come out. We'll have more coming out on socials, but there really is something as it relates to, the MPP, agentic commerce. We got to get Ryan Gentry on, because he had something that came out this past week monitoring that. There's a huge opportunity. I've been thinking about it, just too busy, of, like, you have these tools now. You can effectively integrate Spark, Tempo, whatever you want, to really embed value into a native page online. Like, there's no shortage of things that now people can come up with that will provide value to this cohort of the market that's going to continue to grow, that can just start stacking, whether it's stable coins or dollars or BTC. That I think now has never been a better time to be building, especially if you see AI layoffs and you're hanging out at your job. And I know who you are, because most people are there. I was there, where you work 20 to 40%, the other 60% you're playing around or pretending you're online. Start messing around with this stuff. Listen to the previous pods. We're going to be putting out more research. I think there's just an incredible time, very low capital spend. We're going to be investing on that side. And so reach out to us at our emails or earlyriders.com in the inbox, intake form, because it's just never been a better time. As much doom as there's out there, like the tooling to just like turn on an exchange, to turn on different ways to accrue value in this new world, it's going to be exciting.
Well said. Stop doom scrolling. Start building. Reach out to us if you want to get involved.
It's hard. That algo.
It's hard. It is hard. That is fair.
I mean, Brian had it on here. The end is a speaker of Iran's parliament says holding treasuries makes you a target. I don't even know what that means, but it got him excited. So we'll probably talk more about it. We'll probably talk about it more on Last Trade, because I don't want to scare people right now that their bonds are going to make them a target of the IRGC. But maybe they do. I don't know. Brian will share more on Thursday morning.
All right, boys. Thank you as always. See you guys next week.
If something happened to you tomorrow, could your family access your Bitcoin? Not probably, not they would figure it out, with certainty. I thought about this a lot. You may feel confident managing your own keys, but are your loved ones? Billions in Bitcoin have been lost already because someone died without a plan. With Onramp, inheritance planning is built in directly into your custody setup. Your Bitcoin stays segregated and in your control, insured through Lloyd's of London, and accessible to the people you choose when they need it. Get started in 15 minutes. Book a free consultation at onrampbitcoin.com. Onramp, secured by 3, controlled by me.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.